Hi and welcome back to my channel. First off, I want to say this video that I am making today that is for entertainment purposes only, as I am not a paid financial advisor. So please don't take this as personal financial advice for you. But as for me, if I was starting out as a new investor, would I start out by buying into the stock market right now today? And that answer is no, I would not. And just for the simple reason that all the stocks that are out there right now are so overly valued and so overpriced, there is no way I'm putting a dollar into it. And the same goes for buying a new house right now. I live in Florida and the cost of a house is just crazy. So I wouldn't buy a new house right now. There's a lot of things I wouldn't buy because of inflation, and everything's just way overpriced. The S&P 500, the PE ratio is sitting at about 40. Which is about double what it should be to buy in. So the stock prices are just way too high. Now, of course, that my age plays a big factor in that, as being if you're, I'm 54, so if you were in your 40s or 50s and you only have 20 or so years to go until retirement, why would you gamble your money like that? Especially if you had quite a bit of money to put in, like a lump sum you wanted to invest. I would not do it. And that's just me personally. Now, if you're a young person and you're, 20 years old and, maybe even 30 years old, you got a long ways to go and you just want to start putting money in, like to a Roth IRA and buying into index funds, that's all right. Just don't do a lump sum right now. Do, spread it out every week or every other week, or buy monthly or whatever, make your contribution to your Roth IRA or what have you. But as far as coming into the market right now, there is no way that I am coming into the market right now with it being this overvalued. Should you wait for a crash or correction? That's going to be up to you, as I believe we're heading for a crash here pretty soon. And I believe that it could take a while for this bottom to be found in this market to where it corrects itself. There's a lot of cash. There's a ton of cash sitting out on the sidelines of people wanting to get into this market. But all you got to do is really to back up what I'm saying. I'd go no further than looking at somebody like Warren Buffett, who at Berkshire Hathaway, they are sitting on $150 billion in cash. And they haven't made any big purchases in years because they know that the market is so overvalued. So, you got to ask yourself, why are people like Bill Gates, why is Warren Buffett, why did a lot of these hedge funds sell a lot of their stocks as of lately? And why did Ray Dalio and other billionaires go into value stocks and sell out of a lot of their tech stocks? They see the writing on the wall that everything is so overvalued. Retail investors have recklessly come into this market and they've just pumped these stocks up. And there's just no logic to this madness. I mean, they're pushing this price up. But you got to ask yourself, if Warren Buffett and them, if he's staying on the sidelines with $150 billion, why is he not buying into this market? Is he missing out? No, he knows he's not missing out. And he's not worried if he's got plenty of money in the stock market. You see, at one time, it was very common for people to put, a lot of money in bonds and a lot of money in the stock market, or, split it 50-50, 70-30, 60-40, whatever the percentage was that they split between the two. But see, the bonds, you can't really go into those because they're not paying nothing. You could actually lose money going into bonds. So what people have done is they've went into cash instead. Now, what the government has done to fight people that have done that is they fought us back by printing money. And it's a way that the government is rebelling against the institutions and against big companies. The government has rebelled, the Fed has rebelled by printing cash against that, because these people have actually taken the money out of the market or whatever. So it's just a vicious thing that we're seeing going on. But I'm still in the market. But you got to remember, I got in the market 18 to 20 years ago. I got into the market, and I haven't put another dime in since then. So all my stuff has just been gains over the years. And I've been selling now that this market is run up like it is. I've been actually selling out of my ETFs and putting money into cash And as this market keeps creeping up, if it keeps going up without a crash, I'm going to be selling more. I'm going to try and keep my balance right at 30% cash. But I am not putting any new money in this stock market. And if, like I said, if I was a new investor, it would be the last thing I'd do is be starting out in this market today. Just like the last thing I'd be doing right now is buying a house because of the prices, the price of lumber and all these other things. Inflation has just got out of hand. So I don't know if this video answers your question or not. You know, should you be getting into the stock market? That is totally up to you. Know the risk that you're paying 40 times earnings right now just to get into the S&P 500, even if you buy like an S&P 500 index fund or the SPY ETF or what have you, that you're paying a premium for it right now. And that these things can correct, this stock market can correct, and it could be years before you could see your money, you know, come back to what it was. All right, so just understand the risk. But anyway, I hope you enjoyed this video, and this is Stock Troll, and I will catch you on the next one. God bless and have a great day.